In today's video, we're just going to take a quick look at the S&P cash chart. Now, recently we did meet major target number 1. That was off this major high to low into the April lows. Okay, and we've met target number 1. And one of the things that I always tell you is ratchet up stops, because many moves tend to terminate at extensions of prior swings. Okay. So we've done that, and yes, it's been a good idea to ratchet up stops. You should be stopped out if you were long in S&P. Okay, but let's look at the daily chart next. So here we also had some timing factors. We had August 26th through the 28th. The market was going straight up into the 26th, 28th. Actual high was made on the 28th, and now we've had a pullback. So if you did trail up your stops and you got knocked out, where are you now? Well, we're waiting for the next trade on the flip side. Okay, we're going to look at the support and see if it holds up. Now, I will tell you that we already have support on the S&P futures as far as symmetry, 63, 67 to 73, also down at that 63, 53. I don't have the rest of the price relationships just yet, but symmetry is very important to watch. And then let's take a look at the S&P cash daily chart, and what do we want to do now that the market's pulling back? Well, we want to take a look at all of these prior declining swings within the uptrend to see if the current decline might be similar to that. And if it is, that's where we start watching for a possible resumption of the rally. Now, obviously, we might not get it. This could end up becoming a more important high, okay? But we are going to watch time and price on the way back down. So I'm going to start by running projections of these prior swings. Actually, I'm going to get rid of this 1618. Don't want that in there. So here, let's get rid of this. Okay, and then let's take a look at these other projections, high to low. All right, comparing that decline with this one. Okay, and then obviously this one is incorrect, so I need to do this again. We're going to run this high to this low. Okay, yeah, those come in kind of on top of each other. Let's try some of these smaller swings. Now, these look a little bit too small, but let's try this high to this low. See if that might be similar. Not quite yet, but we're going to watch these areas of support. Let's try this high to this low. We're through that one, so that's not helpful. So we get rid of it. And then this high to low. Okay, there's some symmetry there. And this high to low. We're slightly through that one. Okay, what else will we look at? Well, we're going to look at the other retracements. So from the full swing, we have a major low to high swing. We don't have anything that comes in close to where we're at right now. And we're also going to run some of these others. The higher low to the highest high. Okay, here's another one. Low to the highest high. You can see a lot of those also come in lower. Low to the highest high. Let's get the right one here. Low to the highest high here. And let's try this one. Low to the highest high. And we're going to get rid of what the market's gone through because, again, it's not helpful. I'm also going to get rid of the levels way underneath the market. We're not close to it. It just kind of makes the chart messy. Okay, and we really want to focus on what is close. All right, I can clean that up a little bit later. And then let's see. We can also run this low to this high. Okay, now we may be through the retracements in this case, but there would be some extensions that may come in below. Okay. Yeah, so we really only have a 50% retracement here, but this is an interesting area that comes in below the market. You can also look at the area of the 618 retracement of this larger swing, but it's not an official setup by itself. But this area is. So this is anywhere from, I'm not going to use the 236, but here we go, 62.92 to 63.07. So again, we will watch these charts on the way down and see if we run into maybe some timing on the flip side or some price support, and then we'll see if it triggers or not. If it doesn't, be prepared for a deeper downside correction instead. This last high is considered key and pivotal. Why? Because it hit the key price resistance, it hit the timing, and then it did give you sell triggers. So for example, if you're using this 10-minute chart would have triggered pretty quickly. Okay, so you would have had a moving average crossover over to the downside up here. Let's see about the 30-minute chart. Yeah, 30-minute chart, you would have seen the signal after you had the 834 EMA crossover to the downside, and you took out a prior swing low. So we've definitely seen multiple sell triggers. And again, we will be watching the support on the flip side, but what we're also doing in the trading room is we are going to give you the resistance on the way up, because we have to watch for more possible failures. So we'll be taking these prior swings, projecting them all from the new low, and then that'll be more of a short-term decision. So come and check out the trading room if you're interested. You have access to 2-week free trial without a credit card there. That is on ElliottWaveTrader.net. And you need to choose Fibonacci markets and stocks if you want to check this out. All right, if you enjoyed these videos, then please like and subscribe, and I'll work on a couple more this week.